Well, I guess we've lost Paul there. We're moving now to the Asian markets, which were mostly higher today as developments on the U.S.-China trade front overcame fears of a slowdown in the global economy, which resulted in sharp declines in stocks stateside overnight. The Chinese mainland markets rebounded strongly after an earlier slip. The Shanghai Composite bounced about 2.05% higher to close at around 2,514.87, and the Shenzhen Composite jumped to 2.658% to finish its trading day at approximately 1,279.49. Hong Kong's Hang Seng Index extended gains to rise about 2% as of its final hour of trade. South Korea's Kospi also recovered from its earlier losses to close 0.83% higher at 2,010.25. Japan's Nikkei 225, however, dropped 2.26% to close at 19,561.96, while the Topix Index fell 1.53% to finish the trading day at 1,471.16, with most sectors seeing declines. Australia stocks fell as the benchmark ASX 200 slipped 0.25% to close at 5,619.4. And U.S. stock index futures rose slightly ahead of Friday's open on news surrounding U.S.-China trade talks. At around 5:40 a.m. Eastern Time, Dow futures indicated a gain of more than 275 points at the open. Futures on the S&P 500 and Nasdaq also pointed to a positive open. Investors will also be keeping an eye on a speech by Federal Reserve Chair Jerome Powell at 10:15 a.m. Eastern Time. Powell will take part in Federal Reserve Chair's joint interview panel on monetary policy and central banking at the American Economic Association and Allied Social Science Association annual meeting in Atlanta, Georgia. Investors will also be monitoring key data releases with non-farm payrolls out at 8:30 a.m. Eastern Time and unemployment data out at the same time. There will also be services PMI at 9:45 a.m. Eastern Time. In corporate news, Lamb Weston and RPM International will be reporting before the bell. And away from the equities market and back here, as the year kickstarts, many South Africans seem cautious about expectations in this year's economic outlook. In 2018, the South African economy took a hard knock and landed into a technical recession, but later rebounded by the third quarter as it grew by 2.2%. Many believe through the guidance of President Cyril Ramaphosa and his promised new dawn, the economy should be made to work better. Our business correspondent Natasha Piri reports.
We have embarked on a massive investment drive to place our economy on a new path of inclusive growth. We're encouraged by the many investors, both South African as well as international, who have shown keen interest in investing in our economy.
President Cyril Ramaphosa's investment drive in 2018 may have attracted more investors for South Africa and secured billions of rands. But his main priority for 2019 will be to create more jobs and boost the country's economy, something that Clive Ramatibela-Smith, an economic analyst, places much emphasis on.
For example, the Job Summit, where the commitments made there are they going to be implemented in 2019? We want to see what the budget is going to look like. And then we have also something very, very important that we need to discuss, which was the investments, the commitments that were made in 2018. Will we see a follow-through on those?
Another analyst expects the growth rate to increase by 1.3%, but believes that actively including women and the youth into the economy could be a game changer.
The game changer here is that we need to put the youth on the market, support the youth, not just sugarcoating, putting 1.5 million rand that actually never gets to the youth. We work with entrepreneurs every single day.
Meanwhile, the ordinary man on the street believes that 2019 will be a better year somehow.
As a South African, the only thing we can hope for better economy and better everything. It was a very hard year last year.
Things must really go down. It's too expensive. We can't even afford just a simple thing you can't afford.
While most people believe that 2019 will yield positive results for the South African economy, others are of the view that the upcoming national elections will actually set the tone. From Johannesburg, South Africa, Natasha Piri, Channels Television News.
Meanwhile, South Africa's private sector activity contracted for the 6th month in a row in December as both output and new orders fell further, while purchases also dropped, though the overall rate of decline eased. The Purchasing Managers Index compiled by IHS Markit rose to 49.0 from 48.2 in November, still below the 50 mark separating expansion from contraction that was last reached in June. 3 of the 5 sub-indices were contracted, but all showed slower rates of decline, signaling a recovery from October's 4-year low. Africa's most industrialized economy went into recession in the first half of 2018, but grew by an unexpected 2.2% in the third as manufacturing and agricultural production accelerated. South Africa's growth outlook, however, remains uncertain, with a widening budget deficit and ballooning debt, as well as trade wrangles between China and the United States, posing big risks to an already modest growth forecast of 1.7% for 2019. And 3 former Credit Suisse Group bankers have been arrested in London on U.S. charges that they took part in a fraud scheme involving $2 billion in loans to state-owned companies in Mozambique. The 3 were charged in an indictment in Brooklyn, New York federal court with conspiring to violate U.S. anti-bribery law and to commit money laundering and security fraud. They have been released on bail in London while the United States seeks extradition. The arrest came 5 days after former Mozambique Finance Minister Manuel Chang was arrested in South Africa as part of the same criminal case. The indictment alleges that the former employees worked to defeat the bank's internal controls, acted out of a motive of personal profit, and sought to hide these activities from the bank. We'll take a short break, and when we come back, we get an update from the Nigerian Stock Exchange on today's trading activities. Do stay with us.